Welcome to Built Different. I'm Erin Sykes, business analyst, real estate professional, and someone who's endlessly curious about the systems that shape how we live, grow, and spend. Each week, I dive into the markets, mindsets, and moments that define our lives, from real estate to wealth, psychology, relationships, and everything in between. Because what we build is not just financial, it's human.
My name is Joey Columbo. I am built different because I can spot opportunity and act on it.
Hi, I'm Erin Sykes, and welcome back to Built Different. Today's guest is someone who understands that in luxury real estate, relationships are currency. Joey Columbo is a top producing agent with Douglas Elliman in Palm Beach, operating in one of the most competitive and discreet markets in the country. He was recently featured in The Real Deal for selling a personal transaction to Related Ross tied to new development, a deal that underscores the power of access, trust, and long game positioning in this business. Today, we're talking about how relationships at the highest level are built, how new development deals really come together in Palm Beach, and what it takes to operate in a market where everyone knows everyone and reputation is everything. Welcome, Joey.
Thank you for having me. I appreciate it.
So I'm so excited for you because this was a huge win. You took a big risk personally. And could you break that down in terms of what was this personal transaction? How long did it take to come to fruition?
So in 2021, I started buying condos in a very dilapidated building in West Palm Beach, directly across from Mar-a-Lago. And it was risky at the time. It was pre-Surfside, when people really weren't doing condo buyouts. There really wasn't a market for any developer who wanted to buy them. So I went in one by one and started buying units in this building until I amassed like a 42% interest in it.
Wow.
Yeah.
How did you know? Was it a sixth sense? Did you think, hey, this has a beautiful view. It's in front of Mar-a-Lago. It's easily accessible to 95. How did you know this building?
Well, because of the view, you have endless southern views, which was great across from Mar-a-Lago. And then what was really great is the bridge was under construction, the southern bridge. So it kind of, no one was looking at that, or no one was really driving by it as much. And it kind of let me kind of swoop in and start doing what I did. So yeah, timing was perfect.
Absolutely. And I know, I mean, like you said, it was 2021 when you started buying, and this really just came to fruition late 2025.
Yeah, I bought all the units over like a 3.5 year span, one by one.
How did you go about doing that? I know one of the most challenging thing with condo buyouts is once the community starts to smell what's going on, once people start to see that they could make big numbers, you start to have holdouts, you have to deal with poison pill, you have to deal with HOA regulations. How did you handle all of that?
So by keeping it very hush-hush, the first like maybe 20% was done very quietly with all different kinds of LLCs. Obviously, I had amazing brokers help me throughout the process, but it was really just offering a small premium. And at the time, the units weren't really desirable. So I was offering 10, 15% more, and condo buyouts weren't really a thing at the time. So people weren't as aware and educated on the subject. But then I got to a point where I maxed out and people kind of got smart and they realized they have something, and I couldn't buy anymore after I got to like a tipping point.
So the last few were the most challenging.
Absolutely. Yeah. But I didn't pay more than $350 per unit, $350,000 per unit.
How much did you invest in total?
$1.6 million.
And can you say what your ROI was?
Like a 6x.
Wow.
Yeah. And then my partner was like a 4 or 5x. Yeah.
Amazing. So it was life-changing money.
Yeah, definitely.
Yeah. And I don't know of any individual broker in this area who's ever done the same thing.
No. I mean, I know a lot that have orchestrated deals, but I mean, I put all of my money into it. So that's the risk that I took.
Yeah.
Yeah.
And now when you were going through basically going door knocking and getting people to sign on, what was the rationale that, you explained to them? Was it straight, hey, you can make a lot of money off of what you initially paid for your unit? Or was there another motivator that helped with it?
Mostly the fact that it was an older building with very little upkeep done to it. So there's lots of maintenance issues and looming assessments coming. So people paid $50,000. I was offering them $250,000. So it was a pretty decent return. And with the thought of an assessment coming for even more, it kind of pushed them over the edge.
Did you have to pay into assessments?
I had a small one, a very small, like $2,000 or $3,000 per unit.
But it was a lower rise building. So it wasn't that same Surfside
Right.
7-story plus
Exactly.
issue.
Right. Yeah.
Now, obviously, things have changed a lot. And now we're hearing more about public offerings of these condos. And you even see certain brokerages listing entire buildings where maybe the condo association has already decided that its members are interested in selling. How has the opportunity changed since you went after your building?
Well, there's obviously a huge spotlight on condo buyouts. Obviously, there's a lot of land and desirable land where these condo buildings sits. But I think there's a lot less of a market to do what I did now. I don't know if it would be possible in 2026. You have huge developers that are going in and offering massive premiums for the ease of coming in, buying them all in one swoop, right? So again, even at that point, you'll still have holdouts that could make the whole process more difficult. So again, I think it's just the big guys really have the market right now.
Yeah.
Yeah, it's probably impossible to do what I did again today.
It's amazing. And I think that obviously reputationally, your reputation precedes you in this community. And I think that's part of the reason why you were able to accomplish what you did, because you led with trust and people understood, who you were when you were coming to them. You had plenty of previous transactions to help validate your personal investment in their building.
Right.
But how did you position yourself in these conversations, and what have you done in your past that really readied you for?
Honestly, being stealth at first, really not getting involved, because the more that I got involved or people saw that I did do new developments, people kind of got suspicious. So I kind of hid behind LLCs and different brokers. But then, in the brokerage community, dealing, definitely reputationally, you had to, play nice with everyone.
Yeah. Yeah. I think that's what's so undervalued, maybe from a third party perspective, and especially with all of the discussion today about AI and, if the brokerage model is going to be completely disrupted going forward. Can you just do a home transaction online with no brokerage involvement? But what people don't understand is the personality, the individual to individual, broker to broker conversations that happen. And that's the reason most deals get done. It's not as simple as just writing a number on a piece of paper and handing it over to the other side.
Right. Absolutely. Yeah. It's invaluable, really.
Yeah. Absolutely. Now, Palm Beach is special. Obviously, it's a very tight-knit community. And what has been the feedback where people saw you pivot from just being a broker previously to being one of the biggest individual investors in new development that the community has seen? Do you think it's been good for your work at Douglas Elliman as an agent? Do you think people are holding you in higher regard? Do you have more ammunition now?
I think that's a very nice compliment, but I think people like seeing other people do well, especially when decent people are the ones having good things done to them. So it's been positive. It's been really positive, I think.
Yeah.
Yeah. And it's been years of hard work. So
yeah, I think when I first saw the article, that's what got to me, is when I was reading The Real Deal, and you see your face right next to Steve Ross's as being such a major player in this new development project. And it's just nice to see somebody,
thank you,
individual, small scale, be able to have such a big win, especially when you put such a high percentage of your net worth on the line. It was really going to be make it or break it. And that is the part of the story that I don't know if people have really heard yet.
Yeah, last year there was a point where I thought I was going to lose everything. So it was pretty, traumatic. I was away on vacation. I'm like, oh my God, this could go south and I'd be screwed. So thankfully it turned out well. But it could have done better. I could have done more. Obviously, I wanted to develop it myself, but I got involved with a very big developer and he got his way. So yeah, everything's a learning lesson.
Yeah. And I think that at the end of the day, even though we always want for more, we need to be satisfied with what we get.
Exactly.
Like a win is a win.
Right.
And I think that's also the lesson for individuals who are maybe owners of these condos themselves and they're waiting for their magic opportunity to come.
Right.
Don't be greedy.
That's so true, because 3 or 4 holdouts who want an absurd number can ruin it for everyone. So it's you have to strike when the opportunity presents itself. And sometimes you have to take a little less to, make yourself whole.
Yeah. Now, in terms of what's going to be developed on that site or other sites within West Palm Beach, what are you seeing? I know you're working on the Ritz-Carlton project yourself.
Yeah. Yeah. We're almost 80% sold. So
Amazing.
we're doing really well. We're starting construction next week. I don't know what's going there exactly. I can't say, but you're seeing very expensive branded product coming to the market. A lot of it.
Mm-hmm. Yeah. And I know South Flagler House is getting $4,000 a square foot at this point. That's a number that we never thought we would see in West Palm.
Right.
Especially on that side of Flagler. I mean, the Bristol was an anomaly.
Right.
And it literally feels like a ship. I mean, anybody who is listening who is not based in this area, the Bristol was really a life-changing project or an area-changing project. And our interview with Chris Seville was really testament to that, because people thought that they would never get the $2,500 a square foot that they were asking back in 2020. And
$1,800.
Yeah, $1,800.
Yeah.
And then you look at it now and it's literally doubled. Do you think we're going to continue to see the doubling of square foot prices?
I always think there's a cap, but when you think there's a cap, it just keeps going higher. So, I'm a skeptic. I always think like how many more people are out there that can afford it. And whenever I think there aren't any more, the more come. So what's unique is you're seeing people coming from all over the country, not just the Northeast.
Yeah.
So you're seeing a whole different set of people moving here. And I think that's fueling a lot of the demand and a lot of the price increases.
With the Ritz-Carlton, are you seeing any international buyers?
Not international, but definitely just from all over the country, places you would not see before. Baltimore, Beverly Hills, the Midwest. I mean, like really just all over the place.
What are they looking for? Why are people coming from those areas?
There's a huge spotlight on West Palm Beach specifically. And just, I don't know if it's political or they don't want Miami. Fort Lauderdale's not even in the picture. And then, so where else are they going to go? And West Palm, has an airport. We have Palm Beach that's 5 minutes from us, and you have all this new kind of stuff coming. So I think it's really an attractive place.
I agree. And I think that, like you said, any headline that comes out in the Wall Street Journal or the New York Post, et cetera, it's really driven West Palm Beach, even more so than Palm Beach,
right,
in terms of the public eye and the infrastructure that your business partner, Stephen Ross, is bringing to the table is actually quite incredible too, because I think that was a missing element.
Yeah, schools, hospitals, huge.
Yeah. So in terms of what I've heard, we've got a flyover coming on Okeechobee from somewhere from 95 maybe towards the convention center to help alleviate the traffic.
Really? I didn't know that.
This is what I've heard. It might all be speculation, but to help the tri-rail tracks and that kind of congestion that happens there. The Cleveland Clinic is the hospital that's coming. Offshoots of NYU, Vanderbilt University. I mean, there's just those schools, the Green School expansion, another school in Wellington.
Yeah, I think it's called Cresswinds in Wellington. It's going to be amazing. It's from Singapore.
Oh, no kidding.
Yeah.
Interesting. So I think that is where we were lacking before, especially when people refer to West Palm or Greater Palm Beach as Wall Street South. I always laughed when people said that. Coming from Manhattan, like literally coming from living on Wall Street.
Right.
I just always giggled because I felt like these people don't even know what New York is. Now we're getting real players and we're getting the financial firms and the institutional level of investment that maybe we can actually say that with credibility.
But even if you just get a slice of them, like I don't think it's going to be even more than 15%. But even if you get just a slice, I mean, that kind of gives everything that West Palm needs as far as filling up the office space and bringing more prosperity to the area. So even if it's just a small portion of them that move here, I think I see that as being more realistic.
Yeah, I agree.
Moving of a industry, right?
That's such a heavy lift. And I think, people...
Sounds good, but...
Sounds good. It's a press clipping, but it's really black or white thinking. And really, obviously, the gray space is where real movement happens. And so even if it's just PE and venture that shift down here and the rest stays in Manhattan, stays on Wall Street,
right,
that's still a big piece. And it's actually a high trajectory piece of that financial pie.
And even if it's just the higher ups who come down and have winter offices, right? And they bring a team of 100, 200, 300 people. That's going to make a huge difference too.
Yeah,
I do think there's a lack of affordable housing for people. I think that's a major issue.
I agree.
I'm saying from affordable $1 million to $2 million. Like, where's a family moving? That's what I think could be an issue eventually.
I agree. And that is where I think that the Nora project and Nomar and the areas in northern West Palm Beach could start to accommodate more family, more workforce housing,
Right.
still being commutable. Because the thing is, right now, a lot of people are living out west, and that commute from Wellington east every morning is very challenging.
Yeah. Yeah. I mean, maybe areas like Jupiter, Palm Beach Gardens are going to see huge influxes too.
Yeah. Yeah. Do you think we're overbuilding condos in West Palm? This is a legitimate concern that I have when I'm selling into new construction projects. Obviously, I have no issue with the Ritz-Carlton West Palm. I think you have a very, very strong product.
Yeah.
But there are other products on the market that I am not so confident in. And when I hear 6,500 units plus being built in West Palm, I'm like, ugh. Are they all really going to come to fruition?
So most of those units are probably rentals. So that's a good thing because almost every rental building downtown is at 100% occupancy, which is amazing. So whenever I see a new building now, it's like, oh my God, are they going to be able to sell that? And when you think about it, it's only a small handful of units. So, Maison Door just launched, I think there's 70 units. Another one's about to launch, it's 150. So again, all you have to do is find 150 people who want that product. It doesn't seem as big of a lift. If all of those were dumped on the market right now, I think it would be too much. Yeah.
Do you think the community still wants boutique, still wants 70 units or less?
It depends. I think if you have an amazing complex with amazing amenities, I think more units could be justified. I think there has to be a draw. There has to be an appeal. You can't just build something and expect people to come. You really have to give them a reason to buy.
Yeah.
You can't just put up a glass box and think it's going to sell.
Yeah.
It's not.
I think the amenity
Realistic.
component is very, particular now, and it's a bit of a moving target because every year we get these lists of what amenities buyers wanted in 2025, 2026, et cetera, et cetera. And right now we're hearing wellness amenities.
Yeah.
Now, my concern with that is wellness and wellness technology is such a fast moving component. And what happens when these amenities are no longer the creme de la creme, like the top red light therapy bed or hyperbaric chamber or whatever on the market? Is the reputation of that building going to go downhill when the amenities are old news, or are they going to continue to upgrade the amenities, which would then cause the condo owners to incur the special assessments in order to do so?
Yeah, I think you really just need a great gym.
Yeah.
Right?
Yeah.
Like that's the biggest thing.
At the end of the day,
you need a great
it's
gym. That's what people use.
Mm-hmm.
Beautiful lobby in a really beautiful building with amazing design. And I think it will sell itself.
And the others are just extras.
It's extras. It looks cool. I mean, I don't think anyone uses the movie theaters.
No.
Right?
I don't. The card rooms weirdly get used often.
Card rooms, people love their cards.
But that's cheap. It's easy. I mean, like it's literally a room and tables.
Yeah. I think just focusing on design is so important. I think that's why South Flagler House has done so well because of the just emphasis on design, and it's cohesive and it makes sense.
Yeah. And I do love the South Flagler classicism and the fact that it's not too modern. It's not too white. I think that's my pet peeve with a lot of the Miami buildings is that you walk in and it's almost hospital blindness with the white.
Sterile.
It's very sterile. So I think that they have something beautiful and textured and warm and welcoming going in there. Now, going back to resale market, obviously you work in new development, you're an investor in new development, but how is the resale market performing and shifting in your perspective?
The really high end of the market is doing very, very well, over 25 million. The kind of 10 to 20 range is a little bit slow from what I've been seeing. And then anything below like 5 or 6, if it's a quality product, if it's built really well, is selling really well. But if it's a spec house that isn't compelling in any way, it's going to sit on the market for a long time, and you're going to have price drops.
Yeah. And are you still seeing people in terms of the sell side be unrealistic in terms of what their product is
They'll
worth?
start high, and then I've been seeing price drops the past like week. I think people are like, it's season and I need to sell this thing. So they're getting realistic.
Yeah. It's like not the tail end of the season, but we're definitely in the middle.
If it's going to sell, it's going to sell in the next 3 weeks.
Yeah.
Right. And I think people are realizing that.
Yeah. What is your next project in terms of investment yourself?
I'm looking at a couple different things. Anywhere I can add value. I don't think I want to do a condo buyout again. It was a lot of work. It was really stressful.
I bet. And plus, like you said, things have changed so much. Like you were able to go into stealth mode, but now we have agents, brokerages like Serhant is advertising an entire building. I know I've had a couple developers from California and out of town come in, and I've done giant tours of potential condo buyouts and other types of parcels that they could get. And it's really gone nowhere. And I think we're all, as an industry, as individual agents, we're kind of being pumped for information right now.
Oh, totally. I'm getting calls, like 3 a day.
Yeah.
People just wanting information. I'm like, listen, no one told me how to do it. So,
Right.
go out there, do your research and do it. Right. But I do think the condo market is kind of tapped from a buyout perspective. I'm looking at like larger scale things, to assemble.
More out west or
No, downtown, where I think bigger developers have blind spots. They have layers of bureaucracy that you can't just make quick decisions and buy something. So I'm looking at things like that.
Yeah. And that's probably your greatest ammunition is your ability to be nimble and move quickly, much more quickly than a big developer.
Definitely. I mean, that's really it. I mean, they have teams of people looking at stuff, but sometimes things just slide past them.
And if you had moved forward with developing the parcel, the Southbridge Towers that you assembled, what would you have put there?
I would have done only one brand. I can't say the brand because I think a lot of the brands are a little kind of played out at this point, but something oriented south so that every unit would have a endless southern view, big units.
Yeah, because I think that the condo market, at least from the people moving here on a more full-time basis, it used to be that they wanted pied-à-terres. They wanted to be here part-time.
Right.
Now they're moving actual families into condos. They're looking for 3 and 4 bedroom condos. And I think, when we initially met is when you were on the La Clara project, which was a lovely project, but it was also imagined in 2018, 2019, sold in
Totally
2020.
different market.
And it was a different market where people wanted a pied-à-terre. They were not planning on permanently relocating. And now the product that we're seeing come onto the market is much larger format.
I mean, I think it goes back to like the wealth inequality. I mean, I think the rich are getting way richer and they can afford more. I mean, people are spending $20 million on condos left and right when before people just wouldn't.
And
So
I
I think
really
they'll have
didn't think
more
it would
money.
happen.
Yeah.
I thought that when I started to hear about these transactions, and they were happening in-house, not necessarily with an outside broker all the time. No, they're just bluffing, like they're trying to pump up sales. And that's not true. Like they are genuinely selling $20 million condos left and right.
Yeah. I mean, South Flagler House, I think they've done 200 or 300 million in the past like 60 days. And those are transactions that are 20, 30, $40 million.
Yeah.
It's wild. So
It's absolutely wild.
yeah, I mean, I think I would build obviously ultra luxury. I think that site demanded it.
Yes, we need to more distinctly define luxury because I think luxury is a term that's overused and not every building can be luxury. Not every building should be luxury. Luxury is not always, better ROI than something that's more workforce and mass marketed. But I think it's sexier and people like to be involved with luxury. But I think that what we're learning about the consumers that have come here is that true ultra luxury, high touch, high service, truly white glove. That's what sells here. That's what does well. This kind of mid-market luxury, let's call it Louis Vuitton or Gucci luxury, it doesn't do so well.
Yeah. Yeah. I mean, I think architecture is luxury. I think like a beautifully designed apartment, a floor plan that works is really luxury. I think people in Palm Beach kind of expect it.
Yeah, they know what they're looking at.
They're really sophisticated.
Yeah. What's on your plan for the next year or two?
I am currently building a house for myself. So that's taking up a lot of time. And then other than that, just kind of seeing where things go.
Yeah.
Kind of not making any quick decisions.
Yeah.
Yeah, because the market could go up, the economy could go up, or it could kind of steady out. Or you're the economist. I mean, where do you think it's going?
I mean, it's funny because I did a segment for Schwab this morning, and I always feel like when I'm getting these questions from whatever network it is, people want me to talk in hyperbole. They want me to talk in extremes. And it's either the sky is falling or, it's a vertical trajectory and, hockey stick curve and everything is going to be gangbusters. I think right now we're in a holding pattern. I think housing, there's definitely a bifurcation between luxury and mass. Luxury is doing much better than the mass market is. And that's because interest rates they're not high per se. They're just high when combined with what people's earnings are and how much a house costs to get in.
Exactly.
So,
That's a great point because $2 million used to get you a huge sprawling house. And at 6%, that would make sense. But now it's $2 million for a ranch. And it's like,
it's hard to validate that.
Right.
Yeah. And I think that if you even look at the big home builders, the Toll Brothers and Lennar, et cetera, Toll Brothers is outperforming because they provide a more luxury product, one with larger lot sizes, more personalization allowed in their specs. And even though it's not Palm Beach luxury per se, it's not what we necessarily sell for greater country as a whole.
No, it's nice.
That's a luxury package.
Yeah, right.
And they're definitely outperforming the Lennars and the Pultes of the world, where it's
Interesting.
More scaled down, entry level product, intentionally made to be smaller so that people can actually afford it.
Makes sense. What about the stock market though?
I mean, the stock market's been so strong.
Yeah.
And I think that's why so many people, top tier earners feel very confident about buying into $15, $20, $30 million, be it condos or homes, because they've made 20% plus returns for the last 5 years.
Right.
I mean, people have literally doubled their net worth 1 or 2 times over.
It's crazy.
Since COVID. So it's almost like they can't spend the money fast enough. Now, that is a personality type that maybe I don't agree with. I'm much more conservative in how I spend and how I plan for the future. But there are certain people out there that money is burning a hole in their pocket.
Yeah.
And
keep them coming, right?
Yeah, exactly. If they want to come here, that's great. And we're not judging, but they're being opportunistic in that they're taking loans against those portfolios that have grown so much.
Right.
So they're not getting capital gains taxed, and they're able to invest further in a leveraged way, but in a confident leverage, and be able to diversify with these large home products too.
So you think things are 2026 is positive and 27?
I think it's flat.
And
I think that's the thing. It's just, I think that we've seen highs and lows, and it's not such a bad thing to just flatline for a while.
Yeah.
So I think it actually is a good reset. It's a good reality check for people. And we don't always have to live in an extreme.
Right. I'm a product of the Great Recession. So that's just burned into my mind of just I was in 8th grade and people around me, everyone was losing their homes. So I just always think the worst, I guess. So it's weird to be in a stable kind of valley, if you will.
I think it's hard for a lot of people because
it's either high or low. And it's sometimes just, there's 10, 20 years where it's just kind of stable. And a lot of people feel the most uncomfortable when things are stable because they're addicted to change. As a society, we're addicted to headlines, and we're watching the same media all day long, reporting on the same story 25 times over. It's almost to the point of brainwashing. Then we scroll on social media, and we've got 12 apps of different social media types on our phone, also pushing that same content to us. And it's not allowing people to process and digest enough. Yeah. AI, it's scary.
Yeah. What do you think is the impact of AI on real estate?
I don't know. I think people still value their relationship with their broker, even if it's even just a friendship where it's I'm moving to this place for the first time, and I could probably find the house on my own, but I like the person and my friend used them, so I'm going to use them, right? So I think that it's going to be hard to kind of automate that away. Just guidance of where do I go out to dinner? Which dry cleaner do you use? That's important. Schools. It doesn't sound important, but it really is.
It is. And I think you need to get personal recommendations for those things because yes, there's Google reviews and Yelp reviews and all of that.
I don't trust them anymore.
No, because they're all bought and paid
Yep.
for. So I did see on social media this morning, AI platform that helps somebody, that helps individuals buy homes. And the way that they were advertising is that the individual who was vouching for it was a recent home buyer. He said, I saved 2.5% by using this AI platform because I didn't have to pay a buyer broker commission, which was very misleading because first of all, who's to say he didn't overpay on the house?
Right.
Did he know the product that he was buying?
Mm-hmm.
And then secondly, turns out that this AI platform actually gives you or forces you into a relationship with a broker's representative, a buyer broker representative. So you still are being represented by an agent. It's just somebody that's on a flat fee. They have no incentive to do better by their client. And I think that a lot of the AI conversation is kind of just sitting out there in outer space and nobody's really leveraged it properly, but they're pretending like they've leveraged it and that they know what they're doing with it. And they're selling a bill of goods to individuals like this gentleman who thinks that he saved 2.5% by not using an agent when in fact he actually used an agent.
Yeah.
And he might have overpaid for the house or bought a crappy house at the end of the day.
Yeah. I mean, I think I don't know if the AI is going to know the intricacies of neighborhood by neighborhood and road by road. That road's bad because traffic gets out at a certain time and it backs up and people don't want to live there. Right. So I don't think an AI is going to be able to know that on a granular level, like a realtor would, like a really good realtor would.
Well, that's it.
Who lives in the neighborhood and knows it.
And I think at the end of the day, that's the most important thing because 80% of the individuals in our industry are not good.
Right.
And 20% are good. And 20% will make or break a deal and really save you a whole lot of money, get you into the house or the condo
off market
that you should be.
Yeah, exactly.
But unfortunately, there are just too many individuals, too many agents that are licensed right now. And we're the industry's watered down, but a good agent is worth their weight in gold.
It's always been that way, though. I mean, I see AI, real estate sales, probably one of the industries that isn't as affected by AI, right? Maybe the back end contracts and
more secretarial type work, which is great. I think, a lot of people are starting to use AI for their marketing materials. And we're starting to see back-end integrations in terms of our contract writing platforms. And that's helpful. But I still really believe in the value of a human being and the human experience.
Definitely.
Yeah. Where can people find you?
I don't have social media for my sanity, but email, I have a Twitter, which I probably shouldn't advertise. Yeah, just in Palm Beach.
Exactly.
Yeah.
If you Google Joey Columbo and Palm Beach, his email will pop up, his bio.
Yes.
If you have opportunities for investment, Joey's interested and he can move a lot faster than most of these developers.
Thank you, Erin. I appreciate it.
Of course. Thank you.
Thanks.
Thanks for listening to Built Different with Erin Sykes. If you enjoyed today's conversation, please be sure to rate, follow, and review the show wherever you listen to podcasts. For more insights and updates, follow along on Instagram and share this episode with someone who's building their own version of success. Until next time, keep building a life of value because we're all built a little different. I record Built Different at Pod Plus Studios in Jupiter, Florida. To reach my real estate team, visit sykesproperties.com, and to reach me directly, email Erin@sykesproperties.com.